General Motors out with its second quarter earnings this morning, reporting an adjusted $1.91 a share that beat the expectations of $1.85. Revenue beat expectations too, $44.7 billion. We want to break down this report with former Ford president and CEO Mark Fields. Mark is also a CNBC contributor. And Mark, what do you think of the numbers?
Well, this was a very strong quarter for GM. The revenues were up about 25% versus last year. Their pricing held up really well. They beat on the top and bottom lines, and they raised guidance. So the bottom line is the pent-up demand is still there, and customers are still willing to pay for good product. And so it was a very strong quarter for it.
A lot of people are wondering, though, what to make of the new EV brands, how much demand is out there, particularly when we've seen price cuts recently from both Ford and from Tesla. What do you think? What's the feeling you're getting just from where consumers are, whether there are more consumers who will be brought into these, whether they can maintain pricing?
Well, we're literally at, I'd say, a bit of a make or break moment for the industry when it comes to EVs. You got a lot of capacity coming online. You got a lot of new products. For example, GM is launching their their Silverado EV, their Blazer EV, and importantly, their Equinox EV. You're seeing inventories for EVs about double what it is for internal combustion engines. So, even though we set a record for EVs in the second quarter, EV demand is not keeping up with production. And I think the most important launch for EVs right now in the industry is coming up in the second half of this year, which is the Equinox, which is Chevy's second best-selling model, competing in the highest volume segment. And they're targeting a $30,000 price range. So you're taking the price issue off the table for consumers around EVs. And so if GM isn't successful in ramping sales of that, not only is GM going to have a problem, but the industry is going to have a problem. So it's going to be interesting to see how that product is accepted in the marketplace. You
sound skeptical, and I wonder if that makes you skeptical of these goals to be like an all EV fleet by the year 2030. What do you think of that?
Well, I'm not skeptical about the transition from internal combustion engines to battery-powered vehicles. I'm actually very bullish on it. What I am skeptical about, it's going to happen slower than people expect, because at the end of the day, if you look at history in industries, right? When you think of Netflix, when they went from sending DVDs home to actually streaming them to customers, there was a big issue around, can that company and that industry make that transition? I think they were successful. That the key there is they made lives easier for consumers. And right now with EVs, for the most part, you still have, they're still more expensive than gas-powered vehicles. That's going to be solved by the industry. But secondly, it's the charging infrastructure. And if you're making, at least initially, life more difficult for consumers, they usually take the path of least resistance when it comes to new vehicles and when they're making a big purchase like that. So it's going to happen, but there's a mismatch right now, I think, amongst the industry and analysts around how fast that's going to happen.
So the other issue facing all of the big three is what happens with the UAW. You've got their contract up at the end of September, and we've spent a little bit of time talking about this morning. We had a former labor undersecretary with us earlier this morning who said, look, they're going to have a hard time telling the union that they can't pay all of their demands when we just saw a report on CNBC that says they're making money hand over fist. What's your reaction to that?
Well, listen, any successful negotiation with any automotive labor union around the world, it starts with making sure you're having conversations during the entire contract period, not just when you have a contract coming up. But clearly, the OEMs, the automakers, are going to have a very difficult set of negotiations. For the point that you mentioned, Becky, their profits have been very high. There's a little bit of a labor renaissance, if you will, in the U.S. and the movement. And you have, importantly, a new leadership at the UAW that feels that they have a mandate to improve their salaries, get cost of living adjustments, improvements in pension and health care. At the same time, the automakers are facing, as I mentioned earlier, with the EVs, their margins are lower if they're even positive at this point. And that's going to be a big drag on the automakers. And that's why you see, for example, I think General Motors up their cost savings objectives from 2 to 3 billion through next year, because I think they're looking forward and they're saying, hey, we're going to have to get through this chasm of EV adoption, and particularly while margins are either negative or, just lower than internal combustion engines. So it's going to be, I think, a contentious set of negotiations. But at the end of the day, the optics are there, and with all the profits that the automakers have made over the last 3 or 4 years, there's a perception amongst the rank and file that they want to get their quote unquote fair share. And I think the automakers are going to have to come up with a fair contract, but it's going to add costs to their business. And that's why you're seeing folks like GM up their cost reduction objectives.